This year has recorded significant growth in investments in mutual funds, particularly the money market funds, which are collective investment schemes. Collective investment schemes are vehicles that are tailored to admit or collect money from different individual investors and put it into one investor basket that we call a fund. That fund is domiciled or sits with a party known as custodian, but invested by another professional known as the fund manager, who requests from the custodians part of those funds for purposes of professional investing. Another party known as the trustee ensures that the investor interests with regard to these investments are protected, and the regulator, that the Capital Markets Authority, ensures compliance of the three players, that the fund manager, the custodian, and the trustee, through periodic reporting. Welcome to our today's video. This video is necessitated by the comments and reactions out of our previous video on the top 10 money market funds. And we choose to form this video to bring out the reasons why this particular money market funds stands out from the rest. Welcome to Etica Money Market Fund by Etica Capital Limited. A disclaimer: this video or this information is not sponsored by Etica Capital or any other individual. It is based on our research and analysis of the various fund fact sheets and report by the regulator. We will give you the 7 outstanding attributes that makes this money market fund stand out after 3 seconds break. In the meantime, give us a like to this video or the thumbs up and engage us in the comment section. Give us your feedback, give us your comment or question, and we will make sure we will get back to you almost immediately. Share this video to another person. Welcome to our today's video. Welcome back, and thank you for your subscription, your shares, your comments, and your thumbs up. If you are new to the channel, kindly don't forget to subscribe and hit this notification button so that when we post another video, YouTube will notify you. Reason number 1 is low costs. One of the most important things to consider when you are doing investment, just like any other business, are the costs or the expenses that are attributable to that specific investment. When it comes to investing in money market funds, there are specific expenses, in particular entry expenses or entry charges. There are ledger fees, we have management fees, and we have redemption fees. Some money market funds do charge a certain percentage of the capital that you are putting in for investment as your entry fees, specifically some that are domiciled in the banking sector. Other funds like Saiton Money Market Fund will charge you a ledger fee, and also notably with some other bank-based money market funds. The most common charged fee by all money market funds is the management fee, which is capped at 2.5% by the regulator. If you look at the schedules that we had done, cutting across majority of money market funds, they are charging 2% as management fee, with a few who have exceeded the 2% because of the extra charges relating to taxes. And this is not the withholding tax that is levied on interest income. Some funds, we have VAT and other taxes that become relevant charges, and for most funds, they do not shift forward such levies to the customer in order to make their fund attractive for investment. And one particular is the Etica Money Market Fund. Etica Money Market Fund charges only 2% all-inclusive management fee. So compared to the other money market funds, that alone makes Etica Money Market Fund stand out? Reason number 2 is daily compounding. From this schedule that we have determined, it is notable that we have only 3 money market funds in the top 10 list that do compound your interest on a daily basis. There's something that you need to understand from this complex financial language. We have the term accrual or to accrue, which is different from distribution. Some money market funds will use the term distribution. But to be specific, the term accrual or to accrue means to accumulate or increase by addition. So all money market funds, your interest accrues or accumulates, increases by addition on a daily basis. But the trick is on distribution. Once this interest has accrued or accumulated, the question is it distributed and credited into your investment account on a daily basis or on a monthly basis? Funds or money market funds that distribute or credit your account on a daily basis will always yield a higher compounded interest or a higher effective interest in the long run compared to those that are distributing their interest on a monthly basis. To distribute here would stand for calculating the amount that relates to your account and crediting it in your account, making that interest part of the principal. Remember, these investments are on a daily basis. So if your interest has been distributed to your account on a daily basis, it means it forms part of the principal that will be invested the following day, and therefore your interest will generate another interest element on a daily basis, as opposed to the ones that distribute on a monthly basis, because the interest that has been accruing throughout the month, the daily interest, will not be earning interest cumulatively on a daily basis, but they will only start generating interest. Interest will start generating interest at the close of the month when it is credited to your account for investment purpose. Notably, if you are to do a simple calculation, if you go online, download the calculator, Etica calculator, it's all available online. Use that calculator and put an amount of investment and compare that daily compounded figure with whatever else you are getting from another monthly compounding calculator of another money market fund, and you realize there is a difference. The most important element or asset in your investment when it comes to investing is time after money. The object, which is the amount of money that you are putting in the investment, comes number 1, but the second most important element or variable for investment is time. So the small difference that you are getting from when you look at the daily compounding and the monthly compounding, over time it yields a huge amount of difference. Reason number 3 is low initial entry and top-up amount. It's evident from this schedule that Etica Money Market Fund offers the lowest opportunity for entry into investing. The minimum amount to invest for Etica Money Market Fund is 100 shillings, followed by 1,000 shillings for a majority of the other money market funds in the same category, in the top 10. That means that Etica Capital identified the investment market gap left by the other money market funds or other fund managers. And by so doing then, Etica came in to fill that gap that was left by the other fund managers and offered inclusivity, financial inclusivity in investment. Majority will be able to afford the 100 shillings, which is the minimum entry amount to investing. Another important element to look at when you are looking at the importance of that low entry amount is that most people are skeptical. There is always inherent fear when you are giving away your money for investment. People are more secure with their money owing to the many opportunities that have gobbled people's capital or people's wealth over time. For that reason, most people would want to test the system. Most people would want to test this promise by putting in a small amount of money and watch it over a period of time to see whether the promises that this fund manager is making are true. And as they build confidence over that investment, then they start increasing the amount over time. And that to me looks very vital consideration for many small investors. Reason number 4 is competitive returns. Looking at the top 10 list, Etica appears number 3 out of the schedule at the close of September. But if you look at the other factors and the element there of promise as per the Etica fact sheet, Etica commits or promises to give you an alpha return that is benchmarked on the 91-day treasury bill plus 1%. That means that that element of putting it down on their fact sheet or on their product brochure makes it objective for the investor, and the investor can hold the fund accountable. And that is another level of test, that if an investor, having considered that objective fact in the product brochure over time, would want to ensure that the fund keeps that promise. And over time, you would have noticed that as per this schedule that shows the market interest rates of the 91, 182, and 364 treasury bills, then it is important to note that in this case, Etica did under-promise but over-delivered on their commitment to give their investors alpha returns, because comparing the interest rate that Etica is paying their investors, or the returns that they are able to get for the investors, and what the 91-day treasury bill is offering, they have met that commitment. Looking at majority of other money market funds, their commitment is their fact sheets. They are different, and others are not objectively giving the return that they promised in their product brochures. But in the top 10 category, you will notice that majority of the money market funds are benchmarking their return to the investor on the interest rate or on the 91-day treasury bill without any excess. But Etica gives you 1% extra or above what the 91-day treasury bill is giving you. That makes them outrightly. That makes Etica Money Market Fund stand out again. Another reason is asset allocation. The asset allocation, as per the regulator, is supposed to ensure that the fund is distributed over a number of assets to mitigate or to minimize the risk exposure. While it is normal that no investment is free of risk, looking at Etica's allocation of its fund, it's only a meager 1% that has been allocated to unlisted securities or under commercial papers. That means that 99% of that fund is put under secure well negotiated, near cash, low risk assets, and that protects the capital for the investors. Another reason that is very important is simplicity and transparency. While I appreciate some level of concern by some investors, and that one is based on the amount of information that investor has in terms of navigating in their Etica platform, considering their online presence, only Etica Money Market Fund has been able to provide a functional calculator app for their money market fund. That calculator, when you use it, it gives you exact figures as they reflect in your portfolio account with Etica. Unlike majority, the top 10 money market funds, as we observed their online presence, many of them would require first to mine your data, mine your KYC information before you access any or viable information regarding the money market fund. So for that reason, we would observe that Etica is more transparent and objective in terms of releasing information to their investors. Another important thing that is observable about Etica Money Market Fund is their democratization of investment. They have provided clear, objective ways of funding your account and access or redemption of your account. At this point, when you are putting money or when you deposit money into your money market fund, that one is termed a purchase. You are purchasing units of that fund. And when you withdraw money from your account, you have sold your units, because money market funds, they exchange the purchase and sold units on a 1:1 ratio. And that's why we do not enjoy capital gains when it comes to our investing in money market funds or majorly the mutual funds. Lastly, but not the least, is customer focus. We observe that Etica Capital is customer-centric in nature. If you look at the many online applications, if you look at the many WhatsApp groups that have a community of investors with Etica, and the presence of Etica officials in those groups, it means that Etica are open to customer feedback and criticism directly without a lot of bureaucracy in using channels that are difficult for investors to reach the fund managers or the funds. With those few remarks, we also want to conclude by saying that it's important to note that not that the bigger money market funds by their market share, as a fund grows, it reaches a time where it becomes a little bit difficult or complex for the fund manager to turn over or perform a portfolio rotation of the entire fund, and therefore it becomes more challenging for such funds to yield returns that measure up to the prevailing market interest rates. Thank you for watching.